They say we should have known better than to fall so deep down into this rabbit hole we found. And I was thinking.
Hi, this is Nikolai, and you're listening to my dad, Rafal, co-host James Jardine, and featuring Mr. Jim Tiller on the one and only DtSR Rabbit Hole podcast. Plug in, listen up, and enjoy.
Deep into this pool of regrettable situations. Pitch black, think back to the last time that we were happy.
All right. Good morning, folks. Good afternoon and good evening. Welcome down to Security Rabbit Hole, to another episode of the DtSR Rabbit Hole podcast, your favorite podcast in the cybersecurity space, where we bring you cybersecurity conversations, but also some adjacencies that I think you need to listen to. We've talked finance a couple times. We're going to do this again. I think it's something we need to hear. First and foremost, James, welcome back.
Good morning. I guess good afternoon, good evening, whatever it is for anybody. It's morning for us.
Yeah, it's morning for us. I'm recording at 9 a.m. So, Jim, good morning to you, sir.
Howdy, howdy. I'm really looking forward to this. Finance, understanding the markets, pressures, where we think it's going. It's been a very interesting experience. Last week I was at a conference, and it was a very interesting dynamic when it came to a lot of this kind of conversation. So very interesting.
Yeah. Well, this has been a crazy week for me because last week I got to hang out with Jim in person. Like, we actually got to do this in person, and a couple nights ago I got to hang out with these guys. If you're Dropkick Murphys fans, one of the greatest bands ever to see live. And Kenny came down afterwards and shook hands with people in the audience. I got to show him the red. I kind of did one. He's like, "Look, I got one," and got to meet. It was awesome. The whole VIP thing was super cool. So I'm still riding that high. Never mind the fact that I just got off of a red eye. I've got no sleep, and I'm ready to go, baby. All right, on this episode. In the effort to bring you interesting content that you're not getting in other places, I bring you Mr. Mike, and Mike's going to introduce himself in a second here. But what sparked this was he put up a LinkedIn post that caught my attention, effectively on like market consolidation, market forces in cyber, and I read it, thought it was excellent. Thought you guys needed to hear more about it, or at least some about it if you haven't seen it yet. So, Mike, introduce yourself real quick.
Yeah, thanks for having me on. Appreciate the invite too. The intro music really took me back. Like, this is one of the first podcasts I found when I got into cyber, so it was super cool when you guys reached out to be on it. I'm like, this is very meta for me. But my name is Mike Privette, founder of Eternal Security, and it's a cybersecurity research firm that covers like the economics of the cybersecurity industry. So I track all the financial aspects like funding, acquisitions, who's buying who's investing in who, and then kind of like patterns of where the market goes. I dump it all in a giant database, and then I just write reports and fun stuff from it. And out of that comes sometimes my magnum opus every year, the annual report, or I spend probably about 100 hours like crunching data and writing and just seeing what comes out of it. So yeah, happy to talk about it.
So this year's report, what's the top headline?
The top headline is that we're normalizing out. Like the industry is no longer in like the dire straits it was. We're seeing the rebound a lot. Some of it's fueled by AI. Most of it's not. I will say most of it's not fueled by AI, despite the headlines. So I think that's always kind of an interesting, when you look at the data, this to show just how much of an impact financially it makes. It's different than what you might see on LinkedIn or the news. But we're normalizing out back to prior to, like, I would say probably 7 or 8 years ago, of what the normal industry output was, instead of like the peaks of what 2020 to 2022 was. That's like peak zero interest rate area.
How do you determine that difference between whether it's AI related or not? But like, there's that difference between people really put out, hey, we are AI, and then everything else has AI. Right? Like
Yes.
there's nothing that doesn't happen, I don't think, at this point. Like, how do you make that determination to say like whether it is or not fueled by the AI craze?
Yeah, great question. So it's almost like impossible, even outside of cyber, to capture the true economic impact of how much AI has been injected into everything, because it is everywhere. Now your microwave has AI, and so like it's hard to know, outside of the industries, except for the ones who like self-identify and say we are an AI like adversarial machine testing company, or we are an AI security company helping you make sure you don't put sensitive data in AI systems or applications. So I do a massive amount of categorization of all the companies. So like all the companies I track every week, I categorize it across 160 categories, about like 18 domains in cyber. And so I'm able to kind of slice and dice each one that way and just kind of show like, hey, this is purely AI. Or, for example, like all of the SIM companies or the security operations companies, now they're all with AI as well. But most of them just added it on as opposed to building it directly.
Right.
So there's kind of.
So what we observed years, the observed trend over the last, 20 years, some new buzzwords, some new technology comes out. Every security vendor now with magical, now with machine learning, now with XDR, now with big data, now with cloud, now with AI. Like, how much of that is going on? Because I got to tell you that part of my French crap just annoys the crumb.
Yeah, it's honestly it's frustrating, and it is. There's a lot of it, and a lot of it's driven by that's what gets attention right now, and it's a very attention-hungry economy we're in general, but especially cyber. Practitioners are used to saying no a bunch, just as a general rate of their job. So in order for them to say yes, you need to get them to like think about things in a different way than they already have. And so a lot of people are trying to inject, or a lot of companies are injecting AI into different places or just trying it out. Something I did start this year, though, was to actually call it category drift. So now if you used to be this type of company, I now flag you if you changed it and say, I see what you did there. So then that helps me like track like who else is doing that.
So that's super cool. How much of that happened?
A fair amount, yeah. So like a great example, attack surface management was a very big popular like kind of term and category. Almost all of them have now pivoted to continuous threat exposure management, CTEM. So nothing's changed for the most part. They just named it something different because that's what the analyst firms have said. That's what gained popularity. And so there's a very minute difference in like one versus the other. And so that's a very obvious one.
That's an interesting thing to follow, right? Because you see it in everything, going from like AppSec, it's like the shift left to shift right to, now we need posture management. Now we need this, like all the new buzzwords. And it'd be interesting to see a graph of companies of how they shift to it and see that nothing's changed. But now all of a sudden they associate with every new buzzword out there. Like, oh, no, shift left's dumb. Don't do that anymore. Do this. And it's like, it's the same solution.
Your code base hasn't changed. Your buzzword bingo and your marketing people have changed.
Are you able to, at this point, Mike, to be able to predict it? So if you see an analyst report, insert analyst name here says this, and are you able to sort of almost predict the flow of organizations since you've been watching this dynamic?
Yeah, and I will say, some terms catch on a lot better than others, and so, especially in like really crowded spaces like AppSec, that's a giant bucket of companies' capabilities anyway. But as soon as the posture management word became a term, everyone moved to that direction. So yeah, you can see some of these. Like some of these don't make any sense. Like some categories and are just like purely like rebranding of like an existing
XDR
terms. That's a great one, yeah. Which hasn't done well. Actually, I tracked that one recently. Yeah, but so yeah, you can see some of these coming along. Like, okay, that's going to be interesting, and a lot of it comes down to like where do companies spend their money to like do category creation? Because that's always a much harder game to play than stay in an existing category and just do very well, like do a better product. So you see this positioning so much.
So I got to ask, the question is, so then what's in a name, right? So So for example, I've been in various, let's just call them conversations, whatever. And it's just all about what are we going to call it, right? It's not how we're going to do it right, how we're going to solve real problems. It's like, well,
Yep.
what should we call this? So it's a really cool acronym kind of thing, right? And then now you're
Yes.
sitting here saying that this is a migratory thing, right?
Mhm.
It's like, we're just going to call it this, and maybe that will get attention.
Yes.
Are you seeing? So if you see the crest of the wave, the industry analyst, and you can see the shifting tides, if you will, of the naming, what has been your interpretation? You were starting to get close to it there for a second. What's your interpretation of the quality of these solutions? Are they able to develop them before they lift and shift?
It honestly depends. And many companies are just kind of latching on to the next big buzzword because they might be close enough, or they might straddle a couple different areas. Like maybe they do Kubernetes very well, but maybe they also do something with DevOps and like the DevOps pipeline. And so they may waver between a couple of those to try to latch on to one until one they see enough times, or they have enough customer signals to say, what about, and then they insert a category that they've heard somewhere else. And they're like, oh yeah, we do that also. That's not uncommon. Startups do that. You have to like kind of, they have to do that to stay alive in a lot of ways. But honestly, naming is a lot of stuff that goes into it, but it's super important because that's the kind of, as much as we don't want to think in categories, that's how the industry forces it on us, because categories map to capabilities, that map to security programs, that map to budget. And so if you don't have a budget line item for that kind of flow, then you have nowhere to go. And you have to then knock something off the budget, which is extremely hard to do, to replace it with something else. So that's why you see like an extreme level of like kind of posturing on this, especially as budgets have gotten tighter over the past couple of years. So like at the same time the economy went down, budgets went down, layoffs went up, those things, people just started buying less, and they didn't rehire, and they didn't backfill, and they didn't hire new. So all that kind of like crunch we felt in 2022. Actually, I have a chart in the report that just shows like a cliff drop off on like funding. Like after the interest rate skyrocketed, that changed everything. And so then you had to get a bit more frugal about how to do that.
I have a question for you. One of the things we talked about, I think when Patrick was on a while back, was that, and maybe it was, I think it was a recorded conversation. If not, then y'all get to hear about it now. Him and I talked about the fact that during COVID, money practically fell in your lap if you just like, all you had to do is say, some buzzword, and like, everybody was getting funded because money was cheap, right? Liquidity markets were easy. Money was cheap. Everybody was valued at $10 billion. And suddenly interest rates shot up, right? The cost of borrowing went through the roof.
Yep.
And at the same time, all these companies that had these multi-billion-dollar valuations were just burning through cash like nobody's business. And they're coming up on like, hey, look at us, we're valued at $2 billion. And the market's like, no, you're actually valued at like 500 million. And they're like, well, we're out of money. And they're like, yeah, that sucks. And the prediction was you're going to see some of these like unicorns get like just taken down a couple pegs, and some of them potentially go bye-bye. Did that happen?
Yeah, it did. The dreaded down round, as everyone likes to say, it's like your valuation goes down when you raise money, which is never something that the investors or founders want. But so there was a lot of overcorrection. There were many companies who raised a ton of money in those early times, like 2020, 2021, who then did nothing. No money, no acquisitions, like laid off a bunch of people, and then just tried to weather the storm. The hope of which is to then re-earn back into that unicorn kind of title. And so there was a massive overcorrection on what a good valuation was. So like, oftentimes, valuations are part art and science, and everyone wants to know exactly how to do it, but there's a lot of peer comparison as well. But shockingly little data on what your peers get, unless you're an investor on the round. So you have a hard time comparing notes. So everyone just took like a hard cut and said, all right, actually, you can't raise this much money for this much valuation anymore. We're going to cut that in half now, or maybe we'll just skip the round completely, because at the same term, a lot of VCs felt the exact same issue. Like their investors or their limited partners were saying, "Hey, we need our money back because we're not getting the return, and because the interest rates going up, like we need to put that money to use somewhere else, or we just need it back." So there was like just a freeze up of that overall. Yes, some didn't survive. Some got acquired very quickly. Some lived to see another day, and now are doing acquisitions again. So it's interesting to see how like it's kind of played out. Definitely some I did not think would make it have made it.
So you said you mentioned the M&A market. How's that looking? Because my other prediction was that at some point, like it's an accordion, right? We expand, we contract, we expand. Innovation comes in the little guys, the little startups. The ones that are awesome, or at least the ones that get noticed, get sucked up by the big players. That market consolidates and it shrinks dramatically. And then we go through another cycle, and then the big guys stop innovating. Never really. That's not where innovation happens, at least rarely, right? And then so new startups pop up. They get reassumed. We do this kind of exercise. Did we get a consolidation in the where are we on that cycle? Because I feel like we're back in the expansion, but like a very cautious expansion, except for AI.
Yeah, I would agree. Yeah, we're back on the cautious expansion. So there were more acquisitions in 2024 than 2023. So that was kind of a good sign, like more volume and more dollars per transaction and more total. I think we're back on the swing of more acquisitions. So like 2025 is already outpacing 2024 over the same time. Since I track it every week, I have like week over week, year over year kind of metrics, and I can see early kind of patterns like that. But yeah, I think a lot of those companies they've weathered the storm to 2025, so now it's buying time. And the ones who like can't buy, maybe looking for the emergency lifeline or the acqui-hire or the thing instead of the shutdown. So I think we're going to see another healthy year of M&A, and honestly, a more later stage M&A. So like when private equity comes back into the play, they buy like the biggest of the biggest, or like the public companies, take them private. That's usually a sign that like the market's healthy as well. Like they're back buying, making big transactions on the bet that they can make an even bigger transaction in a few years. So I think we'll see a lot more of that this year.
Are you seeing a change in the total market volume? In other words, as the M&As increase, are you seeing that be backfilled with new startups pretty rapidly? Is there still a huge pipeline, if you will, like a better term, of new startups flowing in, or that kind of stalled while the market is adjusting to consume what's in that space?
No, it's been very ramped up and very healthy. Cyber probably has a lot more entrants than a lot of other industries, to be honest. Like there's, I think I tracked like 75 different AI security companies at this point that have just happened since like last year to date. So there's a lot coming in on that space. And I think we'll just continue to see that as now we're getting to like kind of that second wave of, or third iteration of like AI and security kind of meets is, okay, you made a chatbot, great. Like now what's the next thing? Okay, you can now make an agent that attacks my LLMs or my AI systems. Great, now what? And so I think we'll start to see more specificity on that front. And in the AppSec world, like there's still a ton of startups popping up every now and then because it's such a big space and it's such a hard problem to solve in various ways that I think we'll keep seeing more.
Is there any correlation or any way to see correlation between like mass layoffs, like when you see like some of these bigger companies and like, hey, we're chopping, 10,000, 20,000 people, that with new startups coming into the realm? Like, do we see a lot of people, especially in the cyber world, where it's like, okay, I lost my job here, let me go start something else? Or do we see most of those are like kind of like the sole proprietor, I'm going to go out and consult versus actually be able to start like a startup that might get acquired?
Yeah, I haven't done the exact correlation between layoffs and like new startups like directly, but I will say that most people who early stage cyber companies, like early employees, often go start one, especially if they have a good exit. Like if they get acquired eventually, like it creates an ecosystem of people starting more companies and then trying to sell those as well and trying to repeat the pattern. And so it does happen quite a bit. And then if you look at, countries like Israel, it happens like they like professionalized how to do it, like how to make companies that get acquired and spin it off and do it again. So yeah, but I like that framing though. Like I'll see if I can track that.
If I may pepper you with another similar question, what type of consumer industries, is that the right terminology, that you're seeing most targeted as we flow back into that particular market? So are you seeing a lot of development and solutions for healthcare, financial services, military and government and agencies, things like that?
Yeah, I would say the financial services space is always probably the most hot, only because it has the money and it has the regulatory oversight and burden to prove some of these things more so than other industries do. Early on, I would say like in COVID area, like 2020, 2022, there was a big push for like the tech-enabled cloud-first company that was like 100% remote, probably under 500 employees, and they did everything in SaaS or cloud platforms. And there was a whole slew of companies that came out of the woodwork saying, we have just the cyber tool for you because we plug and play to all of those clouds and all those things you do. And so there's a giant wave on that, but then kind of stagnated, to be honest, because, well, how many companies like that can there be? And they all buy the exact same products. And then they don't scale to a large size. So like a platform that works for like a 500 person cloud first startup doesn't work for Citibank. And so like, there's a no way to get there from that founder journey. So like the return back to like big customers, ones that have to spend, like finance, government, those kinds of things. And you see a lot of that with like the public companies as well. Like, like the big publicly traded companies, almost all of them have like, 30 to 40% of their revenue comes from government entities because they have to spend on these kinds of things. And anytime they miss, or they have a waiver in like their expectations on how much the government's going to spend, the stock goes down. So it's like, it's very interesting sub-market there.
I've always liked tracking the companies going public, right? How many IPOs we get. What's the market like for IPOs right now in cyber?
So it's coming back. SailPoint went public this year for the second time, which is like pretty unheard of. Companies often never go public twice, but that they effectively completed the private equity dream. Take a public company private, resend them to go public, and then make money coming and going both ways. So that was a good sign. And obviously identity is the story that'll never die in cyber. Like you have to always think about identity. And Rubrik also kind of like cyber adjacent, everyone's focused on data recovery and resiliency. So that was a good sign. So it was nice that, it was nice that those two went first. And so, I would say the backlog for IPO has been, people were ready in 2022 when the market started to crash. There were many companies who had either started talking to investment banks or who had declared their interest in going IPO, and then interest rates went way up, and everyone just said, all right, let's just pause until this thing is over. And I remember hearing many companies, and even in 2023, like their mantra was survive to 25, so they could like go public again and start the roadshow again. So it wouldn't surprise me if there was at least 2 or 3 other, large cyber IPOs this year, and then probably even more next year if it's well received.
That's amazing because that process is so expensive. I just couldn't imagine having to start and then restart like that.
Yeah, well, and it's the goalpost has moved since then. So like the typical adage used to be, once you beat $100 million ARR, then you may start talking about IPO roadshow. Like you now have all the right signals to the people who care about that stuff to say, all right, yeah, you're worthy enough to go talk IPO. Now it's 300 to 400 million ARR, which is a huge jump. And so,
okay,
so like.
It's quite.
I was not expecting you to say that.
Yeah, so like it's a lot more than it used to be, and so like a lot of companies will never reach that, right? And so many of them are just they're like, hey, we can just wait until one of these bigger players acquires us instead of doing this.
Wow.
So yeah, the goalpost moved.
What's more? Which one's more lucrative for the? I know what's more lucrative for the investor, but which one's more lucrative for the employees at these companies, to go public or to get acquired?
That's a really tough one, because it all depends on like how much equity they gave away in terms of how much money they raised. You know, I'm sure you guys have watched like Silicon Valley on like HBO, but it's like, it used to be possible for you to like not even own your company when it went public, and you'd lose all your time and investment in like extreme cases. But you know, the goal is to go IPO, and then everyone gets a benefit from the public response to your stock. In the private markets, it really depends on how much equity is given out, and then how much equity the founders even retain. Because by the time some of these late stage companies, if you started at like, if you have two founders, you start at 50%, you may only own like 10 or 12% by the 10 years later as a founder. And so then employees own like a fraction of that. So it's, and then investors always get paid first. So it's, you get
right.
paid first, and then everyone else rolls downhill. So it's very situational.
I've seen a couple of these companies where, and I've experienced this myself a couple of times in my journey to strike it on one of these companies. But you get in, you're early enough, you get an investment round, they disperse some of that love to get people in, get a good investment, get people interested. They have to, at some point recapitalize. You're like, oh, my potential just got cut in half. Oh, that hurts. All right.
Yep.
The valuation goes up, which means that the multiplier goes up, and you start getting to this, like, and Jim, you call it unobtainium. You get to this like spot where you're like, this is going to be impossible for anybody but the investors to make money on this. We're just along for the ride.
Yeah. It's sad but true. Yeah, that can definitely happen. I've seen it happen in my own career as well. Like, hey, this sounded great, now it's worthless.
Yeah. I think Jim's over there. Yeah. We've a lot of us have experienced that. And like the move from private company to VC backed to PE to another PE, and you're like, come on, one of these times, right? Like at some point.
Yes.
7 come 11, come on, baby. I'm curious your take. Where's the money going right now? Is it just AI? Like, are we just stupid AI throwing cash at it?
No, and actually, like based on what I was tracking last year, AI security or security for AI companies only made up like 2.5% of the entire year's total. So you look at the headlines, you think it's way, way more than that, but it's a drop in the bucket, honestly, compared to like data protection, cloud security, even like disaster recovery. Like, people or companies have moved on past like, oh, it won't, the breaches won't happen to us. We're like, well, they'll definitely happen to us. Let's go incident response to like, well, we know it's already going to happen. It's already happened many times. We have to be really good at resiliency and recovery. And so like which is why, some of these companies have done so well. But, as I do expect it to grow, because if you look at 2023 to 2024, it grew almost 100%, and just AI security funding in general. So I expect probably at least that again, because now some of these companies have already raised a seed in Series A, and so they're going to be raising Series B, and the later it gets, the bigger the round gets, the more money. So I expect a lot more of that impact this year, but it's still hard to beat the blocking and tackling of data and identity in our industry.
Is that because we haven't really figured out how AI is going to play in the security industry? Like, there was a lot of hype that it's going to do this, it's going to take jobs, it's going to make this faster, it's going to do it. But I don't know as though anybody's really figured out how they're getting value out of it outside of the fact that it's got the AI logo on it. Like we're not seeing like the jobs disappear. We're, still things are manual.
You got to have your company domain with a .ai on it. That's how you make the millions.
That's how you start, yeah.
But I mean, don't you think like there's a lot of companies, like we still haven't figured out really how to implement these AI features to take advantage of them. It's just another feature that's out there. And probably most people can't tell the difference between automation and an AI.
Yeah, that's a great point about automation and AI. Like I think the industry wants automation, but it's typically named AI. That's why like you see these little like the new age kind of like SOAR platforms actually doing very well now, because they give you automation, and then you can plug in AI components to it if you want, like the Tines and the Torques of the world, those kind of platforms. But yeah, a lot of the industry hasn't figured out beyond that kind of just two initial use cases. It's like, well, I know that I can apply some sort of AI SOC agent to my SIM or like just all my log data to then help me with triaging and incident response, doing some of the low level stuff quicker. So there's probably 30 companies who are trying to do that exact same thing. And then kind of on the other end of the spectrum, it's all right, let's actually develop AI that can help you red team your company's AI applications or LLMs or foundational models. And so there's that kind of a very large gap between those two of like who uses those, who buys those, what companies need those. It's because they're not the same. So it's kind of filling in the gaps now is like the more specific use cases around like, applying AI for data loss prevention, which has always kind of been horribly, broken and ineffective in most formats, could actually be interesting now because an AI agent could tell a M&A document from a social security number. So there's some of that we'll see poured in there, but I do think many people in the industry know that it's important, haven't found the right way to integrate it into like their day-to-day program workflows yet. Like outside a few like small things, like, hey, I can now have it write scripts that I couldn't before. I can have it analyze things I couldn't before, or I can have it summarize threat intelligence data into something that's short and readable instead of like, pages worth of notes for the latest shadow clown puppet or whatever the name of the threat actor is today. Right. But so yeah, I think it's still like a solution looking for the right problem in a lot of ways, but that's kind of natural though with something that's like this different, in my opinion. I think so. I think we'll see a lot more like granularity on that this year and next.
Where's the biggest loser? Like, what market sector in our space is the biggest loser? Who's getting like no love?
Man, yeah, that's an interesting one. I think, the whole GRC space has been kind of like shifted towards the compliance automation space. And so like there, you kind of what you have left over is like all the other parts of governance, risk, and compliance that don't have anything to do with like plugging and playing some of nobody wants to do. Yeah, but in my opinion, I think that AI would be amazing at for a couple of different ways to help, like making it real, making it useful, making it like change management out to your org, like not necessarily like some of the use cases we have today, but yeah, I think there was a big drop in like data lakes as well. Like everyone was like, oh, the build your own SIM is the best way, and now everyone's trying to like kind of moving away from just purely the new age SIM to like, hey, let's put AI in front of it all, put a SOC agent in front of it all, and then like we don't really care about how whiz bang flashy that the SIM is, as long as we have the AI front end. So you see a lot of the companies trying to like pivot around that, and then some of the there's been a big munging of, I would say, what makes an MSSP and what makes an MDR or an XDR or a managed EDR. There's like they're almost becoming very blended now, and you look at MSSP websites and they say they all do it all, and so like it's hard to even really know. So I think there's been a bit of cannibalization in some of those spots.
I'm curious if I may flip that over, come at it from a different direction. This is going to sound so bad. Are we going to see, security, huge market, a lot of people investing, can make a lot of money. So I'm going to create something, call it this. Hopefully people will buy it. I'll make money and buy a house in the Bahamas. Right. But we talk a lot about innovation, but do you think that there's really, are we going to see a major shift toward impactful innovation? Like right now, I feel like we're just kind of plugging bits and like, it's like, I feel like we're just keep tuning up the same old car kind of thing. Right. And so we went from, Neanderthal gasoline to now electric cars. Right. So I'm waiting for that shift in security where we kind of go, wow, what's really happening over here? Or do you think the demand for quick money, I'm air quoting, is going to keep us in this sort of keep recycling your plastic, even though we can't do that kind of thing.
I'll add to that is how, you know, a bit of snarkiness and how many next gen Sims can we have?
What he said.
Right. Yeah.
We'll come up with another name. It won't be next gen.
No, that's a great question. Honestly, it's one I think about a lot, because any market that has a lot of money to be made will always resist changing. Like, there are too many forces at work to keep it the way it is. You can see this in certain segments of our industry that are like really good at cranking out companies that get acquired, or really good segments. And it's, you know, I don't think that'll ever change. And I think that's what attracted a lot of investment. I think it's what attracted a lot of people to enter the market to begin with as founders. So I think that'll stay. But then I do, at the same turn, I do believe people actually believe that once we can figure out this current wave of AI application to security, that we will see this kind of like C-level change you're talking about. But, you know, until we can effectively get like the magic buttons on some of these things, so like that the AI does all of the context for all of the parts of the company, for all of the business owners, all the application owners, all of the risk levels, and it's like you're 100% certain on what the response is or from it, and you just have to say yes or no as a human. I don't know that people will be happy until we get to that like kind of like ultimate state where we can like easy button the response, or easy button things like that.
Yeah, I don't know that I want that state, Mike. For so many reasons. Like we
get RAF resisting change.
Yeah, look at me resisting change. I'm at that age, man. Get off my lawn. Get off my lawn. But no, but AI is still like it's definitely good at some things, right? It's good at identifying, looking at medical scans at very fast rates, faster than humans can do it, and identifying anomalies, things that shouldn't be there. It's really bad at providing citations of case law, for example, that we've seen, right? It makes stuff up. Like, that's not okay. Like, what's happening there? Every time I ask the question, like, how does this awesome new technology make stuff up? And people are like, well, and I get these varying answers of tiptoeing around because I don't think anybody actually knows.
Right.
And until somebody can, like Jim, like you said, until we know for certain, like, I want none of that. I know, because I'm not getting into a vehicle, an airplane, and hell, an elevator that can at some point be like, yeah, the sky is orange. Sure. What?
Yeah. That's a really good point. I mean, I think there's still a bit of distrust in the industry, especially for things that are like, where it's too important to miss, or even a scenario where you may rely on an AI system and you make an action on that, and then you realize the action's wrong and your insurance company won't pay. And then like there's real financial output, like issues with what you did or didn't do based on some system. So I think, which I think the AI, the insurance field is going to have a heyday with very soon. So I think there's going to be a lot of money there, by the way. But I think until they can get that certainty, which is like the current state of the world is not designed to be for certainty. It's designed for predictions and mass kind of like thinking. So it'll be interesting.
It's similar though too, right? You think about like the adoption of AI and where it could be used. It's like, when do we get to that point where it's like there's a true shift? I think back to when there was all the talk in the development world about low code, no code, you don't even need a developer anymore. You're, dude in HR can sit there and build their apps and push that out. But
are you kidding me? I saw that on LinkedIn this morning.
But you don't see like the adoption of that is not very high, right?
No,
and
it's somebody trying to pitch their company.
Even when we looked back to, SQL, like SQL injection and doing, all of a sudden ORMs came out. And it was like, hey, we've got a solution to this, but still, how many SQL injections do we see on Verizon Data Breach Report that, hey, this is still a problem? Like, even if AI gets to a point where you start getting decent adoption, I think there's still going to be a huge swath that never falls into that, just like all these other things. Like it sounds great, but it just doesn't do this one thing that I need it to be able to do for my area. So I can't use it.
Yeah. Yeah, I agree. I think there'll be many more narrow use cases for a long time before we get to this like broad kind of panacea state.
Mike, to close out, because we're out of time, shake that magical 8-ball or crystal ball. What do you expect to see in the next 12 months? Like, what's the expectation? Where do all the trends point to? What's the betting man's view of this market?
I think there's going to be a big shift towards just kind of wrangling the new state of vibe coding. Basically, like anybody can code an app and send it out there. So like, which would then become production apps, which would then become, usable things in industries that are outside of like traditional developer workflows, but then will become business critical. So it's going to be a whole bunch of wrangling around identity around that and permissions around that. And then just kind of the exposure. So like, I think it's going to be kind of more the same that we always see, like more discovery, more exposure management, more identity, more data security kind of locking down, but towards that angle of the space, where since there'll be an explosion of apps and things.
Okay. Well, that's a good place to end it. That's some great analysis, man. I appreciate you. That was educational. I'm dismayed by how much AI was involved in this conversation, how much we talked about it. But maybe now it won't kill us when it comes to life in the day after never. All right, cool, man. I want to check in with you next time you put something like that out. So we can get a sense of the rolling thing that we're living through. These cycles get very interesting. Trying to predict it is how people get rich or very, very poor. And so I'm always interested in hearing people's insights on this. Thanks for taking some time. Thanks for joining us, man.
Yeah, absolutely. It's great to be on, and appreciate it. Good to meet you guys.
All right, folks. Thank you for listening. You can catch Mike on LinkedIn. He's got what's the organization? What's the company name?
Return on Security.
Return on Security. So you guys should go definitely check that out. The report is fascinating. Mike's regular posts are pretty interesting too. The stuff that you should definitely, I think you should be reading, because as much as we live in the sphere of cyber attacks, vulnerabilities, bad guys, good guys, tech, this and that, it's interesting to know what's happening around this bubble, because and finance is such a massive portion of it, because the best ideas with no funding are just ideas. Nothing happens. And believe me when I say lots and lots of terrible ideas made a great pitch once and have a great funding, and the companies still suck. And they're out there. Wouldn't you say, Mike?
Yeah, fair.
Yeah. All right. Well, that's enough for your time. Thanks for hanging out with us, James. Thanks for co-piloting this, and I mean that in the non-AI sense. See what I did there? All right. Thanks for listening, you guys. This has been an awesome episode. I'll catch you guys another time, another place, on another Down the Security Rabbit